So when we are talking about the stock, the other option is crypto, which you also does the crypto trading.
Mhm.
So what differentiate the stock from the crypto? Because I designed a cryptocurrency called eLadder that is living in the Cardano blockchain, and the utility of this particular token is to store the data in non-resistive manner, and I mean some sort of the data has to be non-additive. So on this process, I have built a token, and it's been listed in 2 to 3 exchanges. So when we compare to the stock trading and the crypto exchanges, the difference over here is that the crypto, apart from the stock, it's 24 into 7, and it is cross border. I mean, it's not like there is nobody is I mean, if you want to buy bitcoin from wherever you are, you can buy from one exchange or another exchange, or some other friend can buy and send to your wallet, or if you want to buy some other cryptocurrency, you can buy and you can sell it cross border. Basically, like,
Mm.
it's killing all kind of constitutional blockages over the financial transactions between the countries. So in this particular manner, how do you see this, the trading options which can be applicable in the stock also can be applicable in the crypto trading as well? um how do you see, because crypto is 24 into 7?
Mhm. Yeah, it is a little bit different. There's a few fundamental difference or important differences between stocks and crypto from a trader's perspective.
Mm-hmm.
The first one is the obvious one. It's 24/7. It's always trading. So in stocks, we have the stock market where all of the trading happens. It's in one place on
Mm-hmm.
one set of computers. So all of the trading happens there. In crypto, the trading is happening everywhere, like you said.
Mm-hmm.
In stocks, the stock market opens in the morning and it closes in the evening. And
Mm-hmm.
overnight, it's not open. Well, there's some overnight trading on some exchanges, but generally there's an open and there's a close. In
Mm-hmm.
crypto, happens all the time, 24/7.
Mm-hmm.
So in crypto, there's a notional open and close. It's the time
Mm-hmm.
of day where everyone agrees this is the day's open and this is the day's close, but then immediately the next day starts. So as soon as the close happens, the open happens. So you can
Mm-hmm.
still see a daily chart. You can also see
Mm-hmm.
a 1 hour chart, a 30-minute chart, a
Mm-hmm.
1 week chart. It doesn't matter.
Mm-hmm.
You can still see those charts.
Mm-hmm.
If you can see the charts of the asset, you can
Mm-hmm.
develop systems and strategies that work for that asset.
Mm-hmm.
The difference with crypto is if you get the signal at the close of the day, you immediately have to place the buy because it's
Mm-hmm.
already trading. Yeah.
Mm-hmm.
In
Mm-hmm.
stocks, at the close of the day, you get the signal. The next morning, you place
Mm-hmm.
the trade. You have time.
Mm-hmm.
In crypto,
Mm-hmm.
it's immediate.
Mm-hmm. Mm-hmm.
So then we have to look at how do the markets move? Do the same
Mm-hmm.
strategies in stocks also work in crypto, or
Mm-hmm.
do we have to be different?
Mm-hmm.
Um, and the crypto market is much more volatile
Mm-hmm.
than
Mm-hmm.
stocks typically.
Mm-hmm.
The bull markets are much faster. The bull bear cycles are more condensed compared to
Mm-hmm.
stocks.
Mm-hmm.
So the rules that work in stocks, they can make money in crypto, but generally you
Mm-hmm.
have to adjust them and fine tune them specifically for the crypto market because the
Mm-hmm.
behavior of the market is a little bit different.
Mm-hmm. Mm-hmm.
Having said that, trend following works in stocks.
Mm-hmm.
Trend following also works in crypto.
Mm-hmm.
Mean reversion works in stocks. Mean
Mm-hmm.
reversion also works in crypto.
Mm-hmm. Mm-hmm.
So the generic strategies can be the same,
Mm-hmm.
but the specific rules that you apply, the parameter
Mm-hmm.
values you use, do you use a 200-day moving average or a 50-day moving average or a 10-day moving
Mm-hmm.
average? That might be
Mm-hmm.
different between the two markets.
Mm-hmm.
And that's
Mm-hmm.
something that you have to test. This is why I
Mm-hmm.
like systematic trading, because we
Mm-hmm.
can get the data, we can put our rules over the data and test it historically and see how would that
Mm-hmm.
have performed.
Mm-hmm.
So what we find is that the rules that work in crypto are a little bit different to the rules that work in stock, but
Mm-hmm.
similar strategies, right? We're still
Mm-hmm.
trend following, or we're still doing mean reversion.
Mm-hmm.
Does that make
Yeah,
sense?
when we are talking about crypto, there are terms that is not associated with the stocks is been appearing there, like for example, liquidity pool, yield farms, how far you can get yield from some token in a particular time, and these kind of things. Instead of trading, sometime maybe providing liquidity could be more better, or sometime it can be you can lose all your money, like the Sand Bankman Fried is been done for with the FTX token. He run away with, I mean, he is a kind of build a glitch that I mean, he had some thousands of tokens, and he sold one of the token for 1 billion. So his total asset become he is for, so I mean, he showcased his asset is like a 1,000 billion to the investors and got the money and build the things around that. And in reality, that money is not existing there. So the how do you identify this kind of activity, like means, I mean, FTX is a kind of thing which has been actually backed the US election as well, like this is the way it is been went on. How do we identify, is there any way you found it is identifiable, or is there a way you look into this kind of stuff?
The way I think about it is the crypto market is still new, relatively
Mhm,
new. I mean, it's been around for
mhm,
a fair few years now, but compared to stocks, it's still very new. And so it's a little bit like the Wild West. You know, you
mhm,
see the
mhm,
old Western films, cowboys.
mhm, mhm,
It's
mhm,
like crazy times, right?
mhm, mhm, mhm,
And
mhm,
so crazy things can happen, like
mhm, mhm,
thefts, like scams, fraud, like
mhm,
rug pulls, like
mhm,
crazy things can happen. Whereas in stocks, the markets are more regulated, they're more mature, less crazy stuff happens. Still happens,
mhm,
but less.
mhm, mhm,
You still
mhm,
have stockbrokers go bankrupt every now and then. Doesn't happen that often, but it can happen.
mhm,
In
mhm,
crypto, you just want to acknowledge that it is still a immature market. So there's
mhm,
still
mhm,
the risks that
mhm,
come with being an immature market. And
mhm,
so you've
mhm,
got to think about counterparty risk. You've got to
mhm,
think about catastrophic risk. You've got to think
mhm,
about regulatory risk a little bit
mhm,
more.
mhm,
So,
mhm,
for example, take regulatory risk. The
mhm,
regulations around crypto are still evolving. Would I put
mhm,
all
mhm,
of my money into crypto? No,
mhm.
absolutely not. That would be stupid.
Yeah, for
Because
example, US market is actually whitelisting some of the cryptocurrencies, for example, Bitcoin and things like that. Like, Federal Reserve is trying to move into,
yeah, so
yeah,
that's
yeah.
positive regulatory moves, but also
Mhm,
in a new market there can be negative regulatory moves as well. And so,
mhm, mhm,
we need to basically allocate our capital to acknowledge that there is more risk in one market than there is in another.
mhm,
There's
mhm,
also more risk in one token than
mhm,
maybe in one stock.
mhm,
Okay,
mhm,
maybe not Bitcoin, but small cap, like
mhm,
small cap tokens. Yeah, absolutely, because
mhm,
most of them are worthless. Most of
mhm,
them have
mhm,
no value, no utility, or even if they claim there's got some utility, they got no customer base. It's just a hope and
mhm,
a dream that maybe one day it will make something. So the
mhm,
price is very volatile because
mhm,
the value is uncertain.
mhm. Yeah, because the people who are holding maybe very less number, like compared to, so the market volatility is much more in the crypto token, which is new to the market is.
Yeah, absolutely. So what
Mhm,
we've got to do is make sure that as a percentage of our total investing capital, what we put
mhm,
into any one token is not
mhm,
very much. Because
mhm,
if that token goes to zero,
mhm,
we don't want to lose a big chunk of our account.
mhm,
So
mhm,
my position sizing in crypto as a percentage of my entire trading accounts is very,
mhm,
very small, much
mhm, mhm,
smaller than in stocks, because I
mhm,
know that there's more uh, ticker specific catastrophic risk in crypto.
mhm, mhm, mhm. Mhm.
So I always think about the risk first,
Mhm.
because risk is about survival. It doesn't
Mhm.
matter how much I make this year. If I blow up next year, I've got
Mhm.
no money. But if I
Mhm.
survive first, I never blow up, then I can
Mhm.
constantly grow my wealth.
Mhm. Mhm. So how do you help a person who want to enter into the market? For example, somebody, let's say X person is came to you with 100 USD, and what percentage of how do you help him? Like, will you tell him to put 90 percentage of the money into the stock market and 10 percentage into the crypto, and in this 90 percentage, 80 percentage will go to X stock, and 5 percentage will go to Y stock, and 2 percentage will go to Z stock, and same will go to the cryptocurrency as well? How do you help a person who is approaching you to with some money to invest into the stock market as well as the crypto? How do you help him?
Yeah, my approach is to teach the trader or the
Mm-hmm.
investor how to make those decisions for yourself.
Mm-hmm.
And the way these are capital allocation decisions, right? And the
Mm-hmm.
way we allocate capital is we have strategies in each different market. And
Mm-hmm.
those strategies make a certain amount of return, have a certain amount of volatility, have a certain amount of drawdown potential.
Mm-hmm.
And if we look across stocks and crypto
Mm-hmm.
and we look at all of the strategies we've got in each market, we can create a capital allocation that meets our objectives. My
Mm-hmm.
objective is probably different to your objective because we're different people,
Mm-hmm.
we're different ages, we have different family situations, we have different job
Mm-hmm.
situations. So the
Mm-hmm.
first thing to do is understand your objectives. How
Mm-hmm.
much money do you have? What is your
Mm-hmm.
drawdown tolerance? How much
Mm-hmm.
activity do you want in your account? What's your
Mm-hmm.
return objectives? Once you
Mm-hmm.
understand them, then you start to build a portfolio of strategies
Mm-hmm.
and allocate capital between them to best meet your objectives.
Mm-hmm.
So
Mm-hmm.
to break that down, you need several different or many different systems. And then you
Mm-hmm.
combine those systems into a capital allocation model and adjust the weightings to meet your objectives. If
Mm-hmm.
we do the same exercise, we would end up with a different percentage for stocks and crypto and for each
Mm-hmm.
strategy in stocks and for each strategy in crypto because we have different objectives.
Mm-hmm.
So my
Mm-hmm.
job is
Mm-hmm.
not to tell someone 10% here, 90% here, and within that 90%, 20. That's not my job.
Mm-hmm. Mm-hmm.
My job is
Mm-hmm.
to educate someone so that they know how to make the decision for themselves to best meet their objectives.
Mm-hmm. 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 So in that scenario, how many peoples you have helped so far?
I have several different programs in my stock mentoring program. I've
Mm-hmm.
taken about 500 people through that program over several
Mm-hmm.
years. I
Mm-hmm.
have around 80 people live in that mentoring program right now.
Mm-hmm.
On the crypto side, several hundred have been through the program. The
Mm-hmm.
crypto course is newer, and I've had
Mm-hmm.
other courses in the past that have had many hundreds of people come through those courses as well.
Mm-hmm.
What I teach, or the courses I teach, have evolved over time.
Mm-hmm.
But look, over the last several years, I would say several thousand traders have seen my stuff, worked on my strategies, learned from that, and use that to improve their trading.